Welcome to this part of training where we discuss types of Forex analysis. As I keep saying, every part of this training is so essential that you must master it. If not, you will hardly make money as a beginner and even a professional Forex trader. Analysis, your ability to analyze the market, determines how far or how much you can make the money from the market. So, what are the types of Forex analysis we have? There are two major types of analysis: fundamental analysis and technical analysis. These are the two major analyses you have to know as a Forex trader. Let's look at the fundamental analysis. What is fundamental analysis? This involves evaluating the economic health, political stability, and financial events to determine the strength of that currency, the stability of peace, the peace in the area, that's political stability. All these things are what forms the basis of fundamental analysis. This is used by traders to understand how the macroeconomic factors affect the currency, and it helps the traders to make informed decisions. If all the factors, the fundamental factors, are in good shape, that means the currency will be strong. And once the currency is strong, you should know what to do about that currency. Key factors in fundamental analysis: economic indicators, gross domestic products. Yes, that's overall economic output, the production capacity of a country. A strong GDP usually strengthens the currency. Interest rates. Yes, the central banks set the interest rate. Higher interest rates often attract foreign investments, increasing currency value. Inflation. Rising inflation can weaken a currency, while stable inflation strengthens it. These are factors you have to consider. Employment data. High employment rate indicates that the economy is moving well, so the currency will automatically be positive. Political events, government stability, political uncertainty like elections or unrest can weaken a currency. Geopolitical tension. If there is conflict in particular area of the world, yes, like war in the Middle East, war in Europe, war in Africa, all these things affect the strength of the currency in those areas. Global events. Now, natural disasters such as hurricane, such as flood, all these things affect the economic situation of a country, thereby weakening the currency. Trade policies, tariffs or charges in trade agreement can impact nations' currency strength. These are the things you have to consider as a beginner when considering the pair to trade. So, how do you trade fundamental analysis? You monitor economic reports and news to anticipate currency movement. For example, if a country raises interest rates, its currency might strengthen because higher rates attract investors. In my next video or in my masterclass, you will learn as a beginner how to trade these fundamentals, what to consider. Is it even necessary if you are a beginner or a successful forex trader? You will know. Key takeaway: fundamental analysis focus on economic and political factors that influence currency prices. Understanding these factors help traders make more informed and long-term trading decisions. Now we move to the technical analysis. What is technical analysis in forex trading? It is the study of the past market data. You see, if you have been following this course, I'm talking of history. I discuss about history in the beginning of this site or in this course, and this is how it comes into play. If you want to trade technical analysis, you study the past market data, primarily price and volume, to predict the future price movements. Unlike fundamental analysis, which look at economic and political factors, technical analysis focuses on charts and indicators to identify trading opportunities. Key component of technical analysis: price charts, line charts, connect the closing prices over a period. Bar chart show open, high, low, and close price. Candlestick charts display price actions through candlestick showing open, close, high, and low prices. Trends and movements. Uptrend, series of higher highs and higher lows indicating rise price. We have treated this in the other video. The same thing happens to a downtrend. Sideways, prices move within horizontal range without clear direction. All these are technical analysis. It's via technical analysis you can understand this. Support and resistance. Support is a price level in a downward movement that currency price tend not to cross or go beyond. So in that case, the buyers comes to the market in a support level. Resistance also, when the market is moving higher, a level where the price tends to stop rising and may cause a reversal downward. So these are the key components of technical analysis. Now, this is looking from the platform, but we have indicators also that helps you analyze the market. They help traders predict the future of the price movement. They are often based on mathematical calculations applied to price, volume, or open interest rates. These are indicators. What are these indicators? Example of these indicators are moving average. This shows the average price over a period. Yes, submitting price fluctuations. Relative strength index measure the speed and change of price movement, helping to identify overbought and oversold. These are indicators that traders, beginners use. MACD, moving average convergent divergence, a trend following indicator showing the relationship between two moving averages. If you want to master trend, we have these are the indicator, or this is the indicator that will give you. Chart patterns. Head and shoulders indicate the possible reversal trend. Triangle show consolidation before a breakout in the direction. Double top bottom suggests a potential trend reversal after a failed test. How to trade technical indicators. Now, please, technical analysis. All these things, you will see them practical when we get to the platform on how to use all these things. Traders use charts, trends, patterns, and indicators to identify entry and exit points, predict price movement, and manage risk. By studying historical price data, they aim to make informed trading decisions. This is how you trade using technical analysis. The key takeaway: technical analysis focus on analyzing price charts and using indicators to predict future market movements. It is a powerful tool for short-term traders to identify trades and opportunity. Now, with this, we've come to the end of this video. However, I want you to understand that 95% of successful traders trade technical analysis. In the masterclass, you will understand how to put in all these things together. What indicator is for what? How do you use indicators? We have various indicators categorized based on their functions. In the next, as we progress, you will master all these things. So with this, we've come to know that we have fundamental and technical analysis. Technical analysis applies for short-term traders, while fundamental analysis is mainly for those who want to stay very long in the market. As we progress, you will know which is suited for you.